What's going on YouTube? We're back again for another quick update today. Today we did have a nice rally in the markets, but we did close around over 200 handles in the Nasdaq. We had strong gains in the S&P and Dow, led by the bank names, which had one of the best days that they've had in a long time, with JP Morgan up around 6%, which was its best performance since sometime in 2020, I believe. And we had all the bank names all trading higher, in the region of 4 to 6%. We had the oil names all trading higher. The XOP was up above 142 again. But then it came to after hours, and once again we had, in my mind I was like, all right, the bulk of earnings is done. What else is going to come out here? And Snapchat, our old friend Snapchat, which just tanked before when it was in the 70s and went down into the 30s or something, I think, in that last huge move that it had when it disappointed on its earnings, this time guiding Q2 below the previous consensus, citing macroeconomic factors. So Snapchat is taking 30% tumble post-market, and with that, dragging down a lot of the tech sector, and especially a lot of the other social media names, with the likes of Meta trading down almost like 7%. And it's just, just the bad news won't stop coming, really. And the Nasdaq was down about 155 handles, was down over 200 initially on the back of that, as is basically hit all the Nasdaq names, especially a lot of the tech names, and the S&P currently down about 26 handles. So just another, company seeing this strains of the current market dynamics and the current market environment. So, it's ominous for a lot of the companies going forward in this current climate. So let's just take a look at what we have here for Snap. So Snap did actually release an 8K after the close. And basically, since they issued their guidance back on April 21st, the macroeconomic environment has deteriorated further and faster than anticipated. And so this ain't even a company-wide thing. Now they're citing macroeconomic, which in theory, should be the same type of headwinds a lot of other companies in this space would be, going through. So they go, and as a result, we now believe it's likely that they'll report revenue and adjusted EBITDA below the low end of their prior Q2 guided range. But they do note they remain excited about their long-term opportunities to grow their business, and the community continues to grow, and we will continue to see strong engagement across Snapchat and continue to see significant opportunities to grow their average revenue per user over the long term. So that, just pushing the can down the road, but as it is right now, doesn't look good. So I actually have their prior guidance. This was given in their Q1 earnings. Their Q2 outlook was revenue growth of year on year about 20 to 25%. So now they're implying revenue growth in this current quarter below 20%, and adjusted EBITDA was expected to be break even to 50 million. So that is now implying a negative EBITDA number for Snapchat for the second quarter. So that wasn't good. Let's look at the price action. Here we go. We're trading at 22, which is just insane, right? Considering we at one point was 75, but then again, should it ever been worth 75? It's 80, probably not. But 22 just shows you, we spoke about it last time in the last pod, that even if a stock has been battered to such an extent, it can still go down another 30%. With 22, now we're trading at 15.51. It's a huge, huge drop, and just absolutely brutal. If we actually go out and let's just look out, year to date. Year to date, we actually from if we actually go back, I think we were trading in the 50s, I believe. Where are we? We're trading. Yeah, we were trading, I think, near 50s at the beginning of the year. Right, yeah, there were 40s all the way down. This was in March. Actually, we did bounce quite a bit from March. And yes, actually, from the beginning of the year, we've been trading around 40s to 50s. So now we're trading at another 52-week low, and so not good at all. But let's just see what it did. If we look at some of the other post-market movers, Alphabet, Google trading after hours down about 3.4%. Spotify down 2.8%. Got Tesla, which is, it's just been a dog. I never thought I'd be saying it, but Tesla, what a dog right now, down 2.6% back below 660. We've got Coinbase down about 2.3% after market. Robinhood down another 1.5%, another dog of a stock. Netflix, to be honest, I think that's only down 9/10 after it's been battered unceremoniously. Zoom, however, they did have acceptable earnings. They did miss slightly on the revenue, but did beat on the bottom line, and they were trading up as much as 14%, but now in the post-market trading up about 4.7%. And then the Nasdaq futures, like I said, is currently down about 1.2%, having been down about 1.6% earlier. So let's just bring up a chart of the S&P, see where we're sitting on the back of this. I mean, we are still in this downtrend. We had that Monday last week, which did start us off on the right foot. And then we had that massive down day on the Wednesday. But actually, Monday we were slightly down. Tuesday we had the good day, and then we had this massive down day on the Wednesday, followed by the Thursday and also on Friday. And today, pretty much we are still slightly up, considering the Nasdaq was up about 200 handles during the day, currently down 150. But which the S&P currently is down 25 handles, but it was up about close to 70, 75, I think. I can't remember exactly what it closed at. Oh, here we go, 72.39. So we had a 1.9% move higher. So the S&P is only giving back a little bit. Again, a lot more industrial names making up the S&P, but the Nasdaq once again is the one getting hit. Tech continuing to get ravished. So we're trading back in the middle of this. But again, with this S&P, we're looking at about 38.20. Today's rally really put us nicely above that lower end bar. So we're still more closer to reaching closer to this 4,000 handle, like 39.82. So we're more closer to hitting that than at the lower bound. So we'll be keeping out an eye for these two levels to try to see if we can gauge some direction. But again, what Snapchat just shows is that, the macroeconomic environment is tough. It's tough right now for these companies. And inflation is continuing to bite. We're seeing these fuel costs that just continue, just will not go down. I saw $5 in New Jersey, first time at certain stations. And so, we need to get those costs under control somehow. And hopefully second half of the year, we can start to really get a rein on some of these inflationary pressures that could help just the overall market. Because I think as soon as inflation does turn, then, the market, that will be a cue for the market to rally. But well, that's this today. So tomorrow's looking to be another, initially as it stands right now, another depressing day, but we'll see how it works out. You never know. The bottom end feeders might come in, but, Snapchat, is it a things to come for a lot of these other names? We'll find out. But that's it for this update. If you like what you heard, please subscribe, comment if you like, and we'll catch you on the next one.